Hello guys, and welcome back again to this next session. All right, so today we are basically going to be talking about how to exit trades. All right, because in the last video I laid more emphasis on how you can actually make trade entries. All right, so now in today's class we will be learning how we can actually exit trades, because exiting trades is as important as making trade entries, because if you make a good entry and then you do not know when to exit, you most likely end up closing in deep loss or not making any profit at all. All right. So today we're going to be learning how to make exits on trades. All right. Now there are possibly three results you can get from a trade. All right. Assuming you place a trade, there are three results you can actually get. Now it's either you actually close that trade in profits, or you close it at break even, or you close it in loss. Right now, so you can either close in profit, loss, or break even. And well, of course, all of us want to close in profit here. Of course, we want to close in profits, and at worst, possibly break even. No one wants to make a loss, in as much as losses are inevitable in the game. All right, but then no one wants to make a loss. All right, so it doesn't still change the fact that sometimes we will likely close in loss. And that is why you need to have your SL in the right place, because trading is all about having big wins, small wins, and small losses, no big losses. All right. So you're gonna have losses, but just make sure you have small losses. All right. Now, the thing here is you need to learn where to place your SL so you can actually curtail your losses. Now, how or where do you place your SL? You might want to ask. Now, the thing is, you want to place your SL at invalidation zones, all right? Now, I'm going to teach you how to close your, I'm going to teach you how to place your SL well, where you should actually target for your take profits, and how you can actually move your stop losses to possibly save you, and at worst, keep you in a situation of a break even, all right? So now I'm going to start from the SL and all. Now, you might be asking, where or how do you place your SL? Right now, you want to place your SL at invalidation zones. Now, those zones are places in which, if price eventually reaches, those evaluation points are price levels that, okay, when price reaches, you know that, okay, now this setup has been invalidated, and obviously it's not going to go in my favor anymore. That is where you want to put your stop loss, all right? So that once price hits your stop loss, you know that, oh no, this setup is just completely invalidated. It has broken the rule. So I'm out of the trade, because it's most likely not going in my favor again. All right. Now the thing is, I'm going to give you an illustration on the chart. All right. So let me assume I want to, okay, I'm going to just look for some setups. All right. I'm going to use the setup to trade, to actually explain. All right. Now, it depends on placing your SL2, sometimes depends on what kind of a technical game you're playing, all right? If you're using ICT, like I said in the previous video about how to make entries, if you're using ICT, ICT has trading models and criteria that are quite different from the basic retail price action. So where you place your SL and TP is still dependent on your trading approach in a way, all right? So I'm going to be explaining using both methods, all right? Now, let me give you an instance. Let me assume I'm going to start with ICT right now, all right? So let me say, okay, I have this setup right here, all right? I have these two entries right here. Now, we have price, first of all, coming from a downtrend, all right? Now, we have a break of this low, all right? A break, we have a graph of this sell side liquidity. We have price pulling up, okay? Now, if you look around this zone, if I should go down to my M15, okay, let me just go down to my M15 for clearer explanation, all right? Now, going down to my M15, all right, I'm definitely going to have this. Give me a minute to scroll to my charts. More like a second, actually. All right. Now, on the M15, you actually are going to have this. All right. You're going to have this structure right here. Now, I'm going to just explain the reason for the entry, actually. Now, we have a break of this low, all right? So, price came from a downtrend. Obviously, we are looking to sell in a downtrend, all right? Like I said in previous videos. Now, we have a break of this downtrend, and then price rallied up to where? To imbalance, all right? Now, we have an imbalance over here. I explained imbalance in the last video, where I said it is when we have a space in candlesticks when we do not have an overlap in price. All right, so we actually have an imbalance over here. You can see we have a space. Sorry for that. You can see we have a space in this candlestick here. All right, so bringing this down now, you can see, okay, now this is our imbalance, and it's actually going to serve as our entry. All right, so now we have a break of this previous low over here, and then price did what? Try to fill in the imbalance. Okay, so now in this situation, where do we place our stop loss? All right, now some traders will actually love to place their stop loss above the imbalance this way. I'm not saying it's bad. It's not bad. All right, you can decide to place your stop loss this way, but then to be on the safer side of things, I prefer to place it I prefer to place it above what previous high. Now, why is this so? All right, I'm going to explain why I actually prefer to do it this way. Now, this is because I know that if price eventually breaks this previous high, then there is actually a high probability that we are going on an uptrend from here. That is what I mean by invalidation zone. I'm looking to sell this price. I'm looking to sell this index, and then I'm putting my stop loss above this previous high, because I know that if price validates or breaks this high, then there is a high probability that we will actually be going on an uptrend. Okay, if price eventually breaks this previous high, then there is a very high probability we're going to be going on an uptrend. That is what I call my invalidation zone. Okay, it basically implies that if price breaks this high, then the setup entirely has been invalidated, and then I'm out of the trade and I'm going to wait for the next opportunity. Okay, so now putting your stop loss just above the imbalance, possibly you want to curtail your risks, or I don't know, but anyway, to be on the safer side of things, I'll actually put my own stop loss above the previous high, because I consider that my invalidation zone. All right, now let's look at the next setup. Okay, let's look at the next setup. All right, now price eventually sold, all right, and then broke the previous low again. All right, so looking to our left, we can actually see that we have liquidity on this side of the chart. All right, so price grabbed that liquidity sweetly. Price grabbed the sell side, the buy side liquidity over here. Okay, broke this high as expected, and then it tapped into the other block over here. All right, also tapped into previous imbalance too. All right, now on a normal day, let me show you what I was actually gonna do. All right, okay, I was thinking actually do this, but then this is what it actually is. Now we also have an imbalance over here. If you check on the 1 hour, you're actually gonna see either you're gonna see an imbalance, or you are gonna see a candlestick wick rejection. All right, so in this case, from the M15, we can actually see that, okay, an imbalance actually exists over here. All right, we can see that an imbalance exists over here. But then let's look at what we have on the H1. We're actually going to see either an imbalance or a candlestick wick rejection. All right, so let us look for what we have. All right, meanwhile, this candlestick here is actually another block. All right, so this is what I mean by it's actually another block. All right, I'm just trying to explain the entry, the reason for the entry, and then why we are actually or how we actually intend to exit the trade. All right, now the chart is becoming a little messy. Let me just clean this, take this away for now. I'm gonna take this away for now. All right, so possibly take this one away too, so we can understand this. All right, now this is another block over here. All right, this is another block. Now something I want you to know is assuming, okay, we're actually gonna take a sell using this other block. Okay, usually if you're going to use the other block, you're going to place your sell right here, okay, and then you're going to put your stop loss above here. All right, now this is if you're going to use the M15, but usually when you're quite advanced in your technical analysis, you're going to know that, okay, now you have to check the H1 time frame to see what the H1 time frame is actually saying. All right, now checking the H1 time frame, believe me, you're going to see something really, really interesting. All right, so let's check it together. This is the H1. All right, perfecto. This is the setup right here. All right, this is it right here. Now you can see that our M15 order block appeared as this wick over here. Now, if you see this wick, you will know that a better entry price for you will be using the previous wick on the H1. all right, within this previous week over here that tap into the imbalance, all right. So then it means, okay, you're actually going to be using the previous imbalance again for your entry. And then this week over here, there is liquidity definitely lying above that high, all right. We have buy side liquidity over there. We anticipate that price will grab, all right. So now we are also going to be using what? Assuming we're going to go short, we're going to go on a short there, though I did not get this particular one, all right. So assuming we're actually going to go short, we're still going to place our stop loss, our entry there, and then our stop loss will be what? Above the imbalance at this particular time. You know why? Because we are actually using this week. So we want to see what? We do not want to see, sorry, we don't want to see price break above this high, because price has already broken this low over here. So if price breaks this high, it means we're going to be going on an uptrend, and that is what I refer to as what my invalidation point. All right. So it means I do not want to see price break what? I do not want to see price break this high over here. So my entry is going to be here, and then my stop loss is going to be above this high. Do you understand me? I really hope you understand me. Okay. So now I'm going to be using okay, and then sorry, my take profit at this point, I do not know if I actually explained for the take profit, but then okay, I think I'm going to go through all the stop losses, how you can actually place your stop losses, and then I come back and explain for the take profits. All right. Now I remember I deleted something over here. All right. I think we're going to put it again. All right. Oh, it shouldn't take us back. All right. Now, anyway, but then for this last entry over here, now the reason for the entry was because, you know, in the last video, I told you whenever we see equal highs, in the ICT concepts, okay, we just see liquidity. Whenever we see equal highs this way, we have a high here, we have a high here. We know that, hey, liquidity is lying above these highs, and price will most likely go to grab them. All right. So now we have liquidity lying above these highs over here. We have liquidity lying above these highs over here, and then definitely we anticipate that price will go on to grab liquidity. But now, before we even came there, all right, we have what? A break and a violation of a lot of lows before we reach that point, okay? Price violated many swing lows, all right? Now, this is one of them over here. So we had a break of this low, break of this low, break of this low, and then we have price now going up, all right, to grab this liquidity over here. Now, once we have liquidity, where do we then look to sell from? Where do we anticipate that, hey, liquidity, or we're going to have a reverse in price, all right? Now, imbalance, okay? I spoke about imbalance in the last video. So possibly if you have not watched the video, you will need to go back and watch it so you can understand better, all right? Now, so price, as anticipated, went up to grab this liquidity over here. And then if you can already look to your left side, you will have seen that we already have an imbalance in price, which is from here to here, all right? We have an imbalance in price, and then our entry is going to be at the beginning of the imbalance, and then just like I told you before, our stop loss will be above the previous high, because that is going to be what? Our invalidation zone. If price eventually breaks this high, then it means most likely something else will actually happen in the market again, all right? So you should learn to actually place your stop losses at what? Invalidation areas. So now the next result you can actually close your trades with, or the next way you can actually exit your trade, is possibly hitting take profits. All right. So now where do you place take profits? Where do you place take profits? Now you place your take profit points at before levels you anticipate that price will actually reverse. All right. So now you want to place your TP at price levels or zones that are close to reversal points, which is in the direction that is opposite or against your trade. All right. So if you are selling, for example, it means you want to actually place your take profits before where you actually anticipate that price will reverse to go bullish. All right. So if you're on a sell trade, you want to place your take profits before reversal zones that will turn the trade bullish. Okay, now let me give you an instance with just this explanation. So just this particular entries I also have on the chart. All right. Now the thing right here is we actually sold over here. Now, why did I actually take profits at this point? Okay, It's because I know that this is a support. In as much as liquidity lies below here, price can decide to break here and then start going up again. It's not about market structure. It's the basic, what's it called? It's the basic downtrend structure, lower lows, lower highs, and then the basic uptrend structure, higher highs, higher lows. All right. So price broke this low. We have a lower low here. We have a lower high. We have a lower low here. We have a lower high which we actually took entry from. Price broke this low to form a lower low. So what is the next thing we're gonna actually have? A lower high. Okay, now if price actually reverses, you're actually gonna get stopped out, or you're gonna get stopped at a break even. All right. So the thing right here is you want to place your take profits at zones or at points that are close to the reversal zone. So you can possibly use highs and lows. If you're in an uptrend, then you want to place your take profit at the previous high. If you're in the downtrend, you want to take profit at the previous low. As simple as that is. All right. So we took an entry here. We are targeting this low because we know that, okay, in basic retail, this is actually called a support. All right. It's actually called a support level. So it means there's a potential that price can actually bounce off from this support. Yet, so that is how it actually works. All right. Now, same thing with this over here, right? We took a sell here. We targeted this low. Price reached the low, you go out of the trade. Don't extend it because you see price actually falling with a very high momentum. All right. But then before I go on, guys, there's my PDF is actually out, and it's actually for free, guys. It's actually for free, and it's actually gonna help you with your boom and crash psychology. In this PDF, I've actually dropped top 10 boom and crash psychology that should help you stay profitable in during boom and crash. All right. This PDF was launched yesterday, and today I'm already getting testimonies all around my WhatsApp. So you should check it. The link is going to be in the description of this video. Let's just say it's a gift from me to you. All right. So read it and then get back to me. I would like to hear your testimony. All right. So let's jump back into the video ASAP. All right. So like I said, please your take profit at before price levels that have the potentials of reversing your trade. All right. So I think I'm just gonna rush, and now I'm talking about break even. Okay, break even is when you actually move your stop loss in profits, and then price possibly reverses to hit your stop loss in profit. That is what we call break even. All right. So the thing right here is that when you sell, okay, when you sell, or when you're in a trade, basically, and then you notice that price has actually moved about, let's say 50% in your favor. Possibly you want to put your stop loss at your entry already. All right. Now, sometimes it's actually going to have to do with structure. There are some things you're going to see in structure, in the market structure, and then you know that you actually need to move your what you actually need to move your stop loss at break even. All right. So I think I'm actually going to make a whole different video about that. But then know that, or you can actually have the clue that when price moves 50% in your favor, you should actually put your stop loss at break even. All right. So I think that'll be all for this video. I'm going to continue the next videos. Possibly going to talk about something different or something more advanced about this topic. So I really hope this video was helpful. Drop a like, drop a comment. All right. So you can actually contact me on WhatsApp and on Telegram. Join our channel to get free daily analysis on boom and crash. Get the PDF. All right. The PDF is free, and I'm going to drop the link for you in the description box. All right. So have an amazing time trading. It's King Wesley, and I'm signing out.